So because of all the recent bank failures, banks are actually coming out and saying that they have a higher credit standard. They want you to have a higher credit score, a longer credit history. They want to see that you have not defaulted on any payments or any debts. Well, here's what I can tell you. Right now, we are seeing more people default on debts. This means on home loans. This means on car loans. This means on credit cards. Good news is student debt has not been added in. But according to reports, it's just a matter of time before student loan payments, their pause ends. And when this happens, or if this happens, we are going to see millions and millions of people struggle to make these payments. And if they decide to make the payments for their student loans and not make the payments for credit cards, for their auto loans, or their mortgage, again, it's going to be a disaster. Now, I want to ask you one thing. First off, can you do me a favor? Go ahead, hit that like button if you just enjoy these daily uploads. The second thing I want to ask you is, have you seen your bills come down, or have they actually got more expensive and are going up? And I say this because right now we are seeing the true wages. This is your actual wages. And again, taking into account inflation. Has it gone up or has it gone down? For the majority of people, true wages have gone down. Now I want to read you this article right here. Granted, we're not going to read the entire article, but I want to read you this because this is from the Associated Press. It says, banks report tougher credit standards in the wake of failures. Now, in this article, okay, I want to read you a few different sections of it. So this one right here, it says, the report known as the Senior Loan Offices Survey asks banks if they have tightened their lending standards by taking steps such as demanding higher credit scores, charging higher interest rates, or requiring more collateral, among other steps that altogether would make it harder for businesses and consumers to obtain loans. It says about 46% of all banks said they had raised standards for businesses and loans known as commercial and individual loans, up from the just under 45% in the previous quarter. Now, here's the reason why I want to bring this up. The reason why is because of a couple things. Right here, it says their lending standards demanding higher credit scores. This is something that a lot of people have seen, because now you go into a bank and let's say you want a loan for a car. Well, you have to have a higher credit score. Somebody that comes in with a 580 is probably not going to get a loan, or they're not going to get a good loan. The rates are going to be just astronomical. Well, what about charging higher rates? Because again, okay, you come in, you don't have the greatest credit score, but now you have to pay a higher rate. Well, this is just protection for the bank or the lender, because now they're actually going to charge you a higher rate because you are considered a little bit more risky. Here's another one. And this one right here, I think is actually pretty interesting. Requiring more collateral. So I was recently talking to somebody and they were saying that they had to put up a car as collateral. They had I think a fairly new car or something. They paid cash for it, but they wanted to have a boat. They wanted to take their boat out and enjoy the spring and the summer, and so they wanted to get a boat. Well, the bank asked for collateral. And it's because their credit score wasn't extremely high because they just purchased this car, and they also had higher interest. Okay? So, again, I don't know where things are going to go in the future, but what I do know is that, yes, banks are doing certain things to actually make it more difficult to get a loan. Why? Because if people can't go and get loans, guess what? It's going to help out the Federal Reserve. The Federal Reserve will not have to raise rates as much because people aren't going to get loans. Well, look at this. I want to show you this number right here because this is something that we have to kind of look at. It said at the depths of the 2008 financial crisis, that figure topped 80%. And this is the one where we are currently at 46% of all banks said they had raised standards. Okay, so in the 2008 crisis, well, that topped 80%. It goes on to say the Fed survey also found that majority of banks plan to tighten their credit further this year. That's what I'm seeing. Because I've talked to a handful of people that are working at banks. They're saying the same thing. I actually talked to somebody a few days ago, and this person runs a bank in the Oregon area, in Oregon State, in the Portland area. Anyway, but this person was saying the exact same thing, that they are getting pressure from above to change the way that they offer loans, change the way that they kind of go through these applications. Who gets approved, who doesn't. It's going to be interesting. The rest of 2023 is going to be extremely interesting. But I want to read you something else. It says, let's see, let me find it really quick. It says right here, okay, I want to read you this. It says, that will starve firms and households of credit and help push the economy into recession in the second half of this year. It says, other economists say, it is hard to know exactly when a pullback in lending will start to slow the economy and by how much. Federal Reserve staff economists have also forecast a mild recession for later this year, in part because of an expected reduction in lending. Now, it also goes on to say, in principle, we won't have to raise the rates quite as high as we would have had to had this not happened. So here's the thing. The Federal Reserve can come out and they can continue to raise rates, and it can bring down inflation. It can potentially push us into a recession. Here's the thing. If banks are already tightening lending, reducing the amount of people that go and get loans, if they're doing this all on their own, guess what? The Federal Reserve doesn't have to step in and raise rates even further. Here's the reason why that is a good thing, and this is one of the reasons why experts are anticipating that the Federal Reserve is, yes, pushing banks and bank CEOs to make this call on their own. Make this call. Don't give loans to every single person. If somebody walks in the door and they need $10,000 to go and buy a dirt bike, don't give it to them. Okay? What they're saying is you need to qualify this person first. Make sure they have a decent income. Make sure they have a good credit score. Make sure that this loan will not be defaulted on. Guess what? And in order for them to afford it at a higher rate, you have to make more money. Well, the reason why this is such a big deal is because experts now believe the Federal Reserve is pushing CEOs to just stop lending. Stop lending, because if you stop lending, guess what happens? We won't have to raise rates. And the more we raise rates, the harder it is for you, the bankers, because banks are going to collapse if we have to continue to raise rates. That's what we're hearing. Okay? It's a very interesting time right now, because just a couple years ago, we went from 0% interest rates. Okay? You could go and buy a house for 2.5% or 2.6%. That was an incredible deal. Right now, we're well up over 6. That is the struggle. Is we went from going from 2.5 or 2.6, whatever it was, like 2 years ago, to now we're more than double. Buying a car was a lot less expensive then, right? Again, more than double. You want to go and get a boat? Well, it was a lot cheaper then. Now, it's very expensive. It's very expensive because of your payment. That's a big issue. And the reason why I bring this up is because right now, banks are doing all that they can. Number one, to continue to thrive for some. But number two, they just want to survive this second half of the year. Because we are being told, again, by the Federal Reserve, by the Treasury, by government officials, we will end up in a recession by the end of 2023. We're already in the middle. Today is May 9th. So we are very close to the middle of the year. The expectation is in the second half, we will end up in a recession. So just want to fill you in on what's going on, because right now it's being reported that these banks are doing what they can to keep the interest rates low. And by them keeping their promise and not providing as many loans, that's keeping a little bit of it's helping the Federal Reserve just a little bit so that they don't keep raising rates. So let me know your thoughts on this. Have you seen people trying to go get a loan and get denied? Because I have. I've seen a handful of people try and go get loans and they can't get it. All because they need a higher credit score, they need higher income, they need better credit history, and they just don't have it.